Today I'm going to show you how I saved my client $1,600 on their taxes by doing one simple thing, and how you may be able to save on your taxes by applying the same technique. Stay tuned. Today I wanted to share on how I saved my client $1,600. I mean, they'll actually get a $1,600 refund from the IRS. Here's how I did it. So the other day I met with a new client to do his last year's personal and business tax return. As usual, I was going through my normal process of gathering information. What I found is a key step with any new tax client is to review their last year's tax return for a couple of reasons. You want to make sure that the same tax matters from the previous year carry over to the current year. For example, if they had certain interest income or stock investment income last year, they likely have it in the current year. You also want to check for tax carryovers or carry forwards. And lastly, it's an opportunity to add value by looking for errors that would benefit the client. Just a little background, my client had his bookkeeper prepare his tax returns in previous years. She was good, but her experience with taxes was limited. On his last year's return, I saw there was an IRA distribution resulting in income taxes, and since he was under 59.5, the 10% early withdrawal penalty applied. This seemed fine enough, but upon further examination, I discovered that the distribution was from a Roth IRA. Hence, in this case, it was not a taxable distribution. Why is that? Well, as you may know, Roth IRAs are eligible for tax-free distributions since the tax was paid before you put money into the IRA, opposed to traditional IRAs, which are taxable when you take the distributions out. Bottom line, his Roth IRA distribution qualified as a tax-free distribution. Getting the client a refund of the $1,600 was a simple matter of filing an amended tax return for the year in question. How does this help you, you may be wondering? It's easy. Consider having an experienced professional review your tax return. It really shouldn't take him or her much time to do this. Many even offer a courtesy review of your prior year tax return when you hire them to prepare your current year tax return. In this case, and in many cases, the old saying, "you don't know what you don't know," applies. What does this mean? It means that you can't possibly know all the ins and outs outside of your area of expertise. This absolutely applies with income taxes. My suggestion is to seek out someone experienced and knowledgeable in taxes. They don't necessarily have to be a CPA or an enrolled agent, but it helps to know they've met certain educational requirements and are licensed to practice before the IRS. So to wrap this up, you could be leaving money on the table, i.e. paying the IRS more than you have to. If you would like me to review a prior year tax return, call or email me and we can discuss this. My contact information is at the end of the video. I really appreciate you watching. Please like and subscribe to this video so I can produce more useful content. And if you have any questions, please leave them below. Take care and thanks for watching.